Welcome back. I'm Pratap here. Today is 10th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's evening report. So in today's trading session, out of these three high liquidity zones we identified, and two gave very good trades, and NMDC gave 4 trades, and Navin Fluorine has given one high profit trade. So before we get into these discussions, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist, supply demand zone price action course, at our YouTube channel. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page, and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. Please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let us get into the analysis discussion. The first one is Navin Fluorine. We got a huge return from this stock by using a trailing stop loss, and this is a daily high liquidity demand zone. We have a rally, 4 base candles and a rally candle, and this entire zone we fine tuned with 2 75 minute zones. Let me show you. I'm going to the 75 minutes time frame. This is the 75 minutes time frame. Here we identified one rally base rally, and another one is rally, 3 base candles and a rally candle with a hidden body. This is going to be a rally candle. So again, these two 75 minute zone you need to fine tune with 15 minutes time frame. So I am changing the time frame to 15 minutes. And look inside these 75 minutes and fine tune with 15 minutes. See, here we have a drop candle, base candle and a rally candle, follow through candles, drop base rally. So this is the way we have identified a 15 minute zone inside the fine tuned 75 minute zone. And also we have one more fine tuned 75. Inside again we identified we have a drop, 2 base candles, we have a drop candle, 1 base candle and a rally candle. Again we have a rally candle, 5 base candles and again a rally candle. So that means we have identified 2 15 minute zone inside this, and here 1 15 minute zone. Now total we have 3 fine tuned 15 minute zones, and again we need to fine tune these 15 minute zones with 5 minute zones. So I am changing the time frame to 5 minutes. Now let us look into those 15 minute zones. This is the first 15 minute zone. Inside we have a rally candle, 2 base candles and a rally candle. Rally, base, rally. So this fine tuned 5 minutes is having confluence with daily high liquidity zone. Of course, this 5 minutes is inside 15. The 15 is inside 75 minutes. 75 minutes is inside daily. The 5 minutes is also exactly at the proximal line of this daily zone. Sometimes these zones are very powerful. The reason is previously you learned a dynamic entry buffer concept. Almost 2-3 months back I have explained. We have a special video on that. They also act as dynamic entry buffers. They are just at the border of these daily zones. And also see, just before entering into this, the price is moved up That means there is a strong order flow in this area. This is another indication. Such kind of observations you will see in dynamic entry buffer areas. And moreover, this zone is there exactly at the proximal line. So that's why first time when prices are entering, this may act as a very strong entry buffer. But anyway, this is a completely fine-tuned. Entry buffers need not be fine-tuned, or even they can be a little outside the high liquidity zone. And the next one is not a valid zone. See here, lot of base candles. The structure is not at all good. So that's why I didn't fine-tune this zone. We can leave this zone. Just I want to show you, I just kept it on the charts. Because this is not good for our trading point of view, this is not valid. Because this will be violated easy. But the one below is again a good one. See here we have a drop candle. This is 15 minutes one. Here we have a rally candle. Add some more hidden body also. This is a leg-in candle, valid leg-in. And then we have two base candles and we have a leg out. Leg out candle, follow through candle. This is a valid leg out. This is a large candle. So we have a rally, base, rally. So this is the way we fine-tuned this 5 minutes time frame. So this is a fresh fine-tuned 5 minutes area. And also we have a strong order flow. See here again, earlier prices did not enter into this zone. Just before, even one more time they came a little low and again they moved up. Definitely in this area strong order flow will be there. These are all the price action close. So definitely we should not miss this fine-tuned area. And of course this is the one, the first one. After violation of this only, prices will come up to here. But today we got an entry here. See here, just before reaching prices moved. But this is within our entry buffer area. I mean, whatever the buffer we add for taking the entry within that area. Generally, you can add 3 rupees buffer for this stock, 0.1%. So 3,245 rupees stock, 0.1% means you can add 3 rupees here. And moreover, the value is at 3,035 rupees, something close to that. So you will get 3 rupees, but it came close to 2 rupees close to this zone. That means within our buffer area, we got the entry. If anybody did not add the buffer, definitely you might have missed this trade. An excellent trade you would have missed. Came very close. And here I told you, follow this trailing stop loss. The reason is the momentum in this stock is very strong. That's why I suggested you in our Telegram group, based on 1 minute trailing stop loss, you can plan your trade. See here, initially you have a trailing stop loss. Prices did not come. Even here also you can add rally, base, rally. Here also 1 minute zone, but prices did not retrace. And here also you can add drop, base, rally. Prices never come. See how strong it is. Even 1 minute. Even here. And this is the area I suggested you. This is a 5 minutes demand zone. If it is violated, then you have to exit. Violated means a little below you add some buffer. Even if the buffer also it come down, just came below, but within the buffer area only, just 30 paisa something came below. But okay, that is acceptable. You need not exit here. But it moved within this zone for some time. And after that, see again the momentum. Here again you got rally, base, rally. And from here prices came, picked up the order from this zone. Let me show you. It picked up the order, see here, and again moved up. Again rally, base, rally, rally, base, rally, rally, base, rally. Prices never come to these zones. And here again rally, base, rally. And here drop, base, rally. And after that it is violated. And this is the place we need to exit. Maybe few paisa before or maybe 1 or 2 rupees below, you would have exited. You would have kept some buffer. Maybe sometimes again it will move up, right? So some before. You would have exited. And that is the way Navin Fluorine has given a profit 28,222 rupees as per one futures lot, and which is 30% return on the investment. One futures margin cost is around 94,000. It is not an expensive future. It is only 94,000 rupees one investment. If you would have taken 2 lots of futures, probably you would have got 56,000 rupees profit you would have got. Even one future itself, you got 28,222, which is 30% return on the investment. It is the record stock in all our trades so far for the last 6 months. Whatever HLQ trades we captured, this is the one created the record. So far we have seen the highest was something around 19% ROA in the fast history. But this one is a 30% intraday ROI. We got extraordinary profit. Especially the ROI, return on the investment, as per one futures margin cost. And NMDC, next one, is very interesting. So many trades in that today. Almost 4 trades we got in that. One is stopped out, remaining all 3 are successful. Actually, second one is 1:5 RR it gave. But those who looked for 6% ROI, they would have disappointed today. But 1:5 RR is excellent ROI, the second trade. And third and fourth, no issues. They reached the 15 minutes target level. Why the second one did not reach is because we can't expect. Because the 15 minutes target is far away. It is impossible to achieve. At the time we use techniques based on the RR we can exit, or based on our average ROA, 6% average ROA. That way you can mark and there you can exit. These are the different strategies you can use that we discuss in the once we get into NMDC. So now let us get into NMDC. Actually, one more point I forgot to tell you. Navin Fluorine is also having high liquidity daily supply zone, drop based drop. Previously we fine-tuned this. Previously, I think maybe on 19th February, we might have got this stock. At the time we fine-tuned this zone. And this is available in the chart as it is, because previously we discussed it. And here we have a fine-tuned 5-minute zone. I thought probably the prices will come here. We can go for a short trade. That is what I thought. But just before entering into this zone itself, it came down. That way we didn't get the trade. Okay, the next one is NMDC. NMDC is a daily high liquidity supply zone. So this is the one. We have a rally candle, 1, 2, 3, 4, 5 drop base candles, and then we have a drop candle with hidden body. So this is what we discussed. This is what we identified yesterday. And this daily high liquidity supply zone we fine tune. While fine tuned, we have 3 75-minute zones are identified. This is the first one, this is the second one, and there is a LOTL 75 minutes. We have 2 75 minutes, but they are LOTL. So let us look into them. I'm changing the time frame to 75 minutes time frame, and let us look into them. See, this is the first one. We have a drop, 3 base candles, and again a drop and follow through candles. So this is one zone, drop, base, drop, 75-minute zone. And we have another one, rally, 1, 2, 3, 4 base candles, and again a drop candle. This is a 75-minute zone. And here again we have a drop, 3 base candles, and a drop candle follow. Actually, this leg out is not a great, but still okay, we can consider. The reason is inside there is a very good follow through, and inside there could be an order flow. That possibility is there. So this is a valid 75-minute zone. But this is a LOTL zone. If you are not convinced, this entire candle you can keep inside a zone. You can say drop 3 candles in the base and a drop candle. That way also you can plan. But this is more convincing. Even though it is not a great leg out because follow through candle is there. So just we can compromise and draw. If you don't want to compromise, keep this leg candle also part of the base, and you can draw the zone. That way is also valid. But moreover, the order flow is in these 2 base candles. That's why I never mind to draw a zone between these 2 base candles and make this as a leg out candle. After that, we got a very good leg out here, follow through candle. So these are the 3 75-minute zones we identified. Now let's get into 15 minutes time frame. Inside these 75 minutes, we need to identify 15-minute zones. And please look into this. Here we have an excellent drop, base, drop is there in this 75-minute zone. And the next one is again here we have a drop, base, drop. Maybe many of you may not convince, but because of the range I considered this. After that again we have a follow through candle and one more candle. So that is the way. This is a valid zone. There is nothing wrong. We have a drop, base, drop, and follow through candles. This is the 15-minute zone inside this 75-minute zone. This is the second 75-minute zone. And the next one is, this is the one. We have a rally. Time being, forget about this. I am deleting. I will come back to this and I will explain. This one, this 5-minute zone I have drawn. I don't want to confuse you at this point. Separately, we have a discussion. This is an aggressive trade. Okay. So within this 75, we have a rally, base, and a drop. Rally, base, drop. And follow through candle. So that means we have 3 15 minutes fine-tuned zones. This is the one, this is the second one, and this is the third one, 15 minutes. Now within these 15 minutes, we need to fine-tune with 5 minutes time frame. And look into this. We have a drop candle, 4 base candles, and again a drop candle. That way you can consider, because the range of this entire candle is bigger one, because this is a 5 minutes candle. You can also consider this as a rally candle, 2 base candles and drop candle. This is the way I considered. I marked it as a rally. This is a ERC candle. It is a little bigger than the medium size candle. So that's why I am considering this is a ERC candle, 2 base candles and drop candle. This is the way 5 minute zone we have identified. So this is the fine-tuned 5 minute zone and a fresh zone. It's not tested. And what about here? Here we have a drop, base, and drop candle. See, this is a very big candle. So this is a ERC candle, drop candle. It is a valid leg out candle because the range is very big, and also it is having enough body to qualify the leg out candle, and it came from the base and it came out of the base. After that, there is again a follow through candle is also there. So by considering all this is a good zone. Definitely there is a good order flow in this zone, drop base drop. And the next one is within this 15 minutes area, we have ERC candle. See here, this is not a medium size candle. This is a large candle, but this is a ERC. What kind of ERC it is? It is a failed ERC candle. Because the minimum body is not there. Minimum 30 to 40% body should be there in large candles. Large candles. If minimum 30 to 40% body is not there, we consider that candle as a failed ERC candle. That is what we discussed in our lesson 1.3 in our training course. I explained about these failed ERC candles in detail. Okay. And failed ERC candles can be used as a leg-in candle. That's why this is a leg-in, and you have a base candle, and then again you have a drop candle. Apart from that, I have also drawn one more zone. This is not a fine-tuned zone. And because the risk is high, I just put it as a type 3 proximal level. You may ask a question, can we consider this? Yes, because see, the prices came very close to this, and see a big rejection from here, and prices moved. There is a price action clue. This price action clue indicates in this area there is a strong order flow. The price action clue rejection. Previously I explained, I have in one of our HLQ analysis, one special video, I explained about aggressive trades. I think all those videos I kept in terminology of NeoStock playlist or NeoStock terminology. We have, with that name, we have a playlist. All important videos I was keeping in that. Anyway, in next this week and next week, our training lessons, we will also discuss about aggressive trades. I will explain. But those who want to go through those earlier discussions, please refer those videos. Why we are calling aggressive? Because this is not a fine-tuned zone. This is there inside high liquidity zone. See, this is there in daily high liquidity zone, and also this is there in the 75 minutes fine-tuned zone, but it is not there in 15 minutes fine-tuned zone. There is no 15-minute zone here. So by bypassing the 15 minutes time frame, directly in the 75 fine-tuned 75-minute zone, I have drawn this zone. When you draw such kind of zones, they are called aggressive trades. When you want to trade in the zones, they are aggressive trades. But aggressive trades should be supported by some price action clues. What is the price action clue here? Rejection. Prices came very close to this zone, but they didn't reach up to this fine-tuned area. And moreover, this is having enough risk here. Enough risk. So definitely there will be some good order flow. So you can plan a trade from this. So this is, and moreover, rejection from this zone. See the rejection, and after that how prices came down. So all these points indicates in this area, from where the rejection started, just above that, there will be strong order flow. So definitely we can plan a trade in this zone. Many times the aggressive trades work very well. If you look into our Excel sheet past data, several aggressive trades we have taken trades. So that way we planned we identified 4 order flows. This is the first order flow fine-tuned. This is the second order flow. This is the third order flow. And this is the fourth order flow. Today prices entered into all these 4 order flows, but first one is stopped out. This one has given 1:5 RR, and this trade gave up to its opposite side 15 minutes zone target reached, and this one also opposite side 15 minutes target is reached. Now let us look into those trades one by one. Now we are in the 5 minutes time frame. See here we have a rally candle, 2 base candles, a drop candle, and this is the fine tuned area. And first we want to plan our trade here. So far prices did not enter into this zone, so it's a valid zone. See today what happened? Prices came here. Maybe in this 5 minutes candle sometime it holded. If you look into 1 minute you will get clarity. But demand is very strong today. Such a huge demand. And it couldn't able to hold. And the demand consumed the entire order flow in this area. And finally it is stopped out. And this is the way NMDC has given a loss 2,475 rupees, which is 1% ROA. Why ROA is less? Looks like loss is more, but ROA is less. Reason is it is around 2.5 lakh. The cost of the one future slot is around 2.5 lakh. But see, in Navin Fluorine, it is the cost of the future is only 94,000 rupees. But this is 2.5 lakhs. So from 2.5 lakhs margin cost we calculated, we got 2,475 rupees loss and only 1%. So we have to accept. But see the next one. Again prices entered into the second zone. This is the one. Now let me delete this. We have already, so that you will not be having any confusion. Now this is the one. We need to plan a trade. Risk is also very small. We have a drop based drop. Risk is very small. We can plan a trade in this. And we got an entry here in this zone, just 5 paisa difference below. Generally you add buffer, you will get a trade entry here. But what is the target? Target should be 15 minutes target. See here, observe carefully. This is our entry and this is our target. This is the 15 minutes target. And it is impossible to reach this. It's a very huge target. You know, the price here is 228 rupees and here entry is 240. It's a very huge. Probably if you calculate this ROI, you may get some around 22 to 30% ROI you will get. You may ask in Navin Fluorine we got. That is a different case, a special scenario. Last 6 months, this is the first incident we have seen. Generally, if you see targets above 10% ROI, majority of the times they are impossible to reach. So that is the reason why you have to use different techniques, because you know that price doesn't reach. Then what kind of techniques you can use? One is based on the RR. Maybe 1:3 RR or 1:5 RR. If you achieve, you can exit from the trade. Or second technique could be, maybe you know, what is that? Our average ROI is 6%. Because our average ROI is 6%, from this zone, you can calculate average ROI 6%. There you can mark a horizontal line, something like this. Let us assume this is the level. If prices reach up to here, you may get 6% ROI. Once prices enter into this blue, I'm drawing just. Maybe it could be a little up. Once prices reach here, you can exit from the trade. That way also you can plan. But 6% ROI, do we reach today? We don't know. Maybe we may reach, may not. But already one zone is stopped out. So this one is stopped out. That's why at least our second trade you should be very careful. Rather than expecting a huge target, first you expect a decent, either 1:3 or 1:5. See today here, it reached 1:5. See from here, we have 1:5 RR is here. From here up to here. So somewhere here it has, I'm sorry. Let me double click in the properties, we will tell. So where is the entry price, where is the target here? This is the entry, this is the profit level. See 238.75 paisa. This is, if you reach, if prices reaches to 238.75 paisa, we will get 1:5 RR. Let me draw a horizontal line. And coordinates let me change. 238.75. So exactly here. See after reaching, let me go to, you will get clarity. See here, we got an entry here. It reached the entry, and in this candle, the same candle. Let me go to 1 minute, you will get further clarity. See, all of you please observe here. In this candle, we got the entry. And in this candle, fourth candle, 9:55 candle. This is the 9:52 candle, and this is the 9:55 candle. 9:55 candle, it reached the 1:5 RR, and after that again price moved up. Once again came, in case if you did not sell here, you got again another opportunity to sell in this 10 o'clock candle, or even 10 o'clock 1 minute candle. You got the opportunities. This is your entry, this is your exit actually. Within 4 minutes, your trade is completed. And you got 1:5 RR from here to here. Why? Because we are looking for, because it is impossible to reach this. It's a huge target. Practically it is impossible to reach this. That's why we adapted this technique. And prices also, they didn't go beyond this. Here only exactly 1:5 RR only, it moved for some time. Definitely you have to exit. Why we are going for this approach? Because previously one of the zone is stopped out. Today demand is very high. Don't want to take more risk. 1:5 RR is a very good decent one. Decent target. And that way the second trade, without reaching its 15 minutes target, we exited at 1:5 RR itself. And that is the way NMDC has given 9,000 rupees profit. Even profit is good, but our return on the ROI is only 3.6%. 6 is our average ROI. We got less than 6. The reason is the target, the 15 minutes target is very, very far. Okay, this is the way it is successful trade, and after that again the zone is violated. Now let me delete this information so that you will understand exactly. Yeah. Even this 75-minute zone also I am deleting. So this is the most recent 75 minutes fine-tuned zone. 15 minutes fine-tuned zone inside 75 minutes time frame. Something we deleted, the wrong thing. Sorry. So I'm going to 75 minutes time frame. Okay, this is the one, actually the 75 minute zone I deleted mistakenly. Let me draw. That is what. Where is the 75 minutes missing? That is what I am thinking. See, this is the daily zone. Inside this daily we have a rally, 1, 2, 3, 4 base candles and a drop candle. This is the 75 minute zone. So inside this 75 minute zone, now we have this 15 minute zone. We have a rally, base, drop. And within this we have again the fine-tuned 5 minute zone. So this is the one. We have a ERC candle as a leg out, base, ERC candle as a leg in. This is the base and leg out candle. Here we have a 5 minute zone. Now this is the third zone, the third fine-tuned zone. And now we want to plan a trade here. And after that, this is the aggressive zone. And this is the 5 minute zone, not inside the 15 minutes, but is inside this 75 minutes and also inside this daily zone. This entire thing is daily. And this is 75 minutes. And this is 15 minutes. But without 15 minutes, here we identified 5 minutes. And also inside this 15 minutes, we have a 5 minutes. This is the fine tune. Now we want to plan a trade here. Okay, now prices reached into this. See here, at 10 o'clock 15 minutes, prices entered into this. Then what is our target? Target should be 15 minutes time frame. So where is the 15 minutes time frame? Here we have a rally, we have a base candle, and then again we have a rally candle. This is going to be the target for this particular entry. So we got the entry at 10 o'clock 15 minutes and reached the target at 11 o'clock 15 minutes, 15 minutes candle. That means within 1 hour this trade is completed. This is the entry and finally it reached the target. And this is the way NMDC has given 17,775 rupees profit, and which is 7.1% ROI as per one futures lot. Now this trade is completed. Now let me delete this to bring the clarity. I am even deleting these zones. Now what is remaining? The aggressive trade is remaining. See here, let me explain once again. Here we have a daily zone. Inside the daily zone, we have identified this 75 minute zone. And inside this 75 minutes, here we don't have a 15 minute zone. Here we have directly only 5-minute zone. 15-minute zone is not here. That means we bypassed 15 minutes. But we bypassed 15 minutes and we identified a 5-minute zone. Now I shifted to 5 minutes time frame. See here, we have an excellent rally, base and a drop. You can plan a trade like this, week to week, type 1 entry. This is a type 2 entry. Because risk is very high, still we want to minimize. In case if prices did not come, we don't take the trade. If prices get into this, then only we take a trade. Because we minimized the risk as much as possible. And why we are considering this as an aggressive trade? See the price action close. Earlier prices came and then came down. That means in this area, see the rejection from here. After that the move down. That means in this area there is a strong order flow. Because there is a strong order flow, definitely we should not miss it. And we have a 5-minute zone, but not a fine-tuned zone. That's why it is an aggressive trade. This is not a fine-tuned zone. We bypassed 15 minutes. Directly inside some fine-tuned 75 minutes, we directly identified the 5-minute zone. Many times such kind of zones will be violated. If you take a trade, they will be violated. When they will work? When there are strong price action clues. Here the price action clue is rejection. Rejection always indicates there is a high order flows. Rejection comes only when there are strong order flows in that area. And just above the rejection we have the zone, fine-tuned zone. I mean not fine-tuned. The type 3 adjusted zone. So that's why we want to take a trade here. We have a confidence that definitely there will be strong order flow. And that way today finally prices entered into that zone. When it entered at 12 o'clock 45 minutes candle. Came down but it didn't reach the target. And once again prices entered into this zone. After that it came down and finally reached. Almost reached very close, just 10 paisa before. 10 paisa before this 15-minute zone. Generally what we do, some 15 paisa, 20 paisa, 30 paisa before, we will exit our trade. So that way we captured the profit. So how much profit we got? We got 17,550 rupees profit we got. And again it gave another 7% ROA as per one futures lot. See total how much profit including the negative ROA. What is the total we got? Some 16.7% profit we got from these 4 trades. Including the stopped out one. If you deduct that, we got 16.7%. ROA we got just one stock NMDC. How much profit including this loss if you deduct, you would have got a profit of 41,850 rupees. You would have gained the profit today. If you took trades in all these zones. So it's an excellent trade, right? See, both the stocks, they got a very good profits today. Navin Fluorine and as well as NMDC. Whichever the one you selected, definitely you would have got good profits. And Navin Fluorine is very extraordinary today, 30% intraday ROA today. As per trailing stop loss. And the last one is ICICI Prudential. ICICI Prudential, we already discussed, we want to plan the trade. The reason is, yesterday I explained in yesterday's video. This is a 2020 stock, zone. The supply zone is from the year 2020. And trading view 5 minutes data is not available. And some of you might have taken trading view lower plans. For you, trading view will give you only 10,000 stocks. If it is a TradingView premium offer, they will give you last 20,000 candles. Last 20,000 candles, I can see only last 1 year data for 5 minutes time frame. And those who have taken TradingView even lower level plans, they would have given you access to only 10,000, last 10,000 candles. Last 10,000 candles means maybe you can view only last 6 months data. I remember some of you put in the comments, you are seeing only last 6 months. Why I am seeing last 1 year is because my plan is a little bigger plan, premium TradingView. So that's why they gave me last 20. Some people, I think even last 40,000 candles also they pay TradingView. I think they are charging 1.5 lakh or something for that particular. That is very expensive. Okay, fine. So this is about the high liquidity zones generated from our yesterday's list, and also there was a lot of learning I think you might have seen, especially how to plan aggressive. Aggressive how to plan is not a new concept. I've been explaining several times for the last 6 months. But those who recently joined and started trading recently, for you aggressive trades are a new concept. Until you learn the old videos where I explained how to trade aggressive trades, if you go through, you will understand them. Anyway, very soon you will be learning in the training course also as part of lesson 21. Okay, this is about today's session. Hope you enjoyed this session. Let us all meet again in our next video. Thank you.